Hey, everybody. It's your boy, Sean McLaughlin at Options Sean on Twitter X. Today's Thursday, November 6th, 2025. I hope you're doing well. How are things? How are things? I got the fireplace going here. It's starting to get to be not quite winter yet, but there's a chill in the air in Colorado. I've been feeling it. And hey, it looks good. So there you go. Hope everybody's doing well. This is the live options jam session. Jam session? This is the jam section. This is the live options jam session where we review action in the portfolio, any exits or entries, any adjustments we've made the positions. We discuss any learning opportunities, any lessons from anything that happened in the portfolio this weekend. We do have one to talk about. And we'll, do a little high level overview of what I'm seeing in the market. And of course, I will take questions. If you guys have questions, put them into the chat. Kevin, I see your question. I will get to your question. That's a good one. I will get to it. But let's start. Oh, no, not there yet. Let's start here. Let's start here with charts. Let's bring up SPY, the SP 500 getting slippery. It's given back all of that breakout that we had at the end that Friday the 24th going into the October 27th, right before Halloween. This breakout here, I really thought, let's zoom in on that. I thought this was really the launch pad for the face melting face ripper that I thought we were going to get into the end of the year. Well, we've completely retraced that and then some. So now we're kind of back to square one. We're still riding above the 50 period moving average. So as far as I'm concerned, it's still a bull market. But man, it's not making it easy on us, especially anyone who's holding long beta, high beta names. It hasn't been fun. Lots of fits and starts in my shorter term account. I've been having a lot of stop outs, a lot of ins and outs, getting whipsawed multiple times in same names. It hasn't been fun. But the bull market is still intact until otherwise declared, right? And I like the way the S&P kind of traded down and has come back into the middle of the range. So we'll see. We'll see what happens. VIX, let's bring up VIX. Let's see what that looks like here real quick. VIX, not really telling us a whole lot. It's got a 19 handle there. I don't know what happened to TrendSpider charts here. I don't know why they show these red and white volume bars here. There's no volume in VIX. This is a statistical product here. This thing doesn't actually trade. So I apologize for that look. But with VIX at 19, it's higher than it's been certainly over the last week, but we're not at red alert levels by any means. One thing I want to point out to people, just because I see it on my chart, is UMAC. This is a trade that we're in. It's on the verge of breaking a support level or breaking our stop loss level. My stop loss, and this is 11. We were below 11 earlier today. I want to see it close below 11. As long as it doesn't close below 11, the trade lives to fight another day. Let's fingers crossed that happens. All right, so let's get into action in the portfolio over the last week. Let's see, recently closed positions. We'll start with NVT. I wrote about this on Friday. If you get my free notes, you've already read my notes on this. But if you don't get my free options note, I write just about every trading day. The link is in the chat right there at the top. That first link I shared, it's free. I share lots of educational content, including a little post-mortem on this NVT trade that we were in. This is a great winner for us. We finally got out of the full thing on Friday. From closing half of our position to closing the other half, it happened pretty quick. It doesn't usually happen that way. But this is a position we were long some February 100 strike calls we got into right in the beginning of September. And the position started working for us right away, and then it consolidated for a better part of a month here. And then it bounced off the 50 period moving average or 50-day moving average like you'd like it to see. And then when it got above 105, I believe was my price, or maybe it was a 107, 106, somewhere in that area. It was all in the detailed plan for this trade. Once it broke that level, I wanted to sell half of my position for whatever I can get for it. In this case, I was able to get 1350. And then as the stock continued to cruise higher, we had 116 was the price target, 115. I should have these details for you guys. I don't have them at my ready right now. It's like it's already out of my out of my accounts. I've already forgotten about it, but you know what? I'm going to look it up right now. Just want to make sure I'm giving you guys all the best information. I'm pulling up my trade plan here real quick. Let's see. So I was playing for the $100 roll, right? When it got to 105, that was the first thing. So 105, this is where I sold half. As soon as we hit a 105, I sold half at 13.50. And then the rest of the plan was if we got to my analyst had a price target of 114. That's what it was. My analyst had a price target of 114. And so if we got to 114, that's where I was going to sell the other half. And that's where we got right here on this day. This was Friday on Halloween. So from selling half to selling the other half, it happened pretty quick. It doesn't usually happen that way, but you know, it did, and it's great. So we bought these for 550. Our average exit price there was I don't know, 16 and change. Pretty good trade. That's about triple our money. Nice. Great trade for those of you who participated in that one, but we are now out of NVT. Sadly, SMCI, this is a trade we just got into this trade. This was a quick exit. Got into this on Monday, I believe I got into this on Monday. Let me confirm that date. Yeah, no, we got it on Friday on Halloween. Serves us right. Got into this trade on Friday on Halloween. We bought a large a March 55.85 bull call spread. We paid 625 for it. Well, the stock just completely fell out of bed right away, making me look like a complete idiot. But you know what? There wasn't a total loss. Got out for 286. Still stings, especially when it happens that fast. But you know what? If it's dead money, I'd rather be out of it quickly than have it linger in my account longer than it needs to. So we are out of SMCI. Look, I say this all the time, but I was willing to risk all 625, right? I was willing to take a zero on this if I had to in a worst case scenario. I don't want to, of course. So getting out of 286, not so bad. All right, lastly, Pony got out of this one today, and this is where our lesson is today. And this is a lesson on following the plan and why we have the plan. So we were long some January 200 calls, and boy, did we time this entry amazing. I mean, you know, crystal ball or hindsight 2020, of course, we didn't know that this thing was going to rip literally the day after we got into it. But on September 18th, we got into the January 20 calls for 225. Literally the next day, the stock started ripping. Beautiful breakout. And we had a plan to get out of half of Pony if it got to 24 bucks. Now, why did I choose 24 as my level to sell half? Well, the simple reason was that was the all-time high, or right around the all-time high that was posted back in February 21 of the earlier this year. It went up to 24, got immediately rejected. And now I certainly didn't expect a immediate rejection to happen again, but this was on my mind. And so I thought that that 24 level could be a significant level. At the very least, it would offer a pause on what could then be a meaningful breakout to go further. But either way, I wanted to take some risk off the table when we got there. And boy, am I glad that we did, because we sold half our position at 650. That's great. And just like last time the stock got to 24, it got immediately rejected, and it more or less has gone straight down ever since. We had a little bit of a bounce that gave me some hope, but that bounce quickly faded. Our stop loss was at 1650. In hindsight, I wish I had my stop loss up here at 16, 1750-ish. Maybe would have saved me a few bucks on this trade, or a couple bucks on this trade. But either way, this half that I sold for $1.45, which I sold this morning, that was free money. That was already adding to my profits, because when I sold half of my position at 650, I already locked in guaranteed profits. The rest of that position could go to zero, and I'm still walking away a winner. So this $1.45 that I got out today just added to my take on the trade. So it feels like a loser right now because of the way it acted, but the plan, because we followed the plan, hopefully you followed the plan with me. We followed the plan, so we actually made some money in this trade. What's the average? If you average those two exits together, it's about what? 385. Hold on, I have it in my notes here where I exited. 398 is what that averages out to be, roughly. All right, so let's just call it $4. Okay, so I bought it for 225. My average exit's $4. Not a home run by any means, but 77% gain. We'll take it, right? But this is what we get for sticking to our plan. And sometimes I get questions, I get pushback. There's two schools of thought. Some people love the idea of selling half of your position at a double. This is an idea I used to follow to a T for many, many years. I've kind of adapted that a little bit over the years, and this is an example of that. I now tend to sell half of my position. If I sell half of my position, I tend to do it at a logical resistance level, not just because I doubled my money. Nothing wrong with that, by the way. I know Steve does that with the breakout multiplier, and that's great, and it works for him. And I do it too from time to time. But I've kind of I don't want to say advanced, but I've moved on. I've morphed into someone that likes to sell. If I'm going to take some profits off the table, I want to do it at levels that I think are obvious resistance levels. In this case, this was one of them. And there's two schools of thought, right? Like some people say, "Oh, I love selling half." Well, for people who love selling half for whatever reason, either at a double or at a resistance level, then you love what happened here, right? No, you don't love what happened here, but you're like, "Okay, this is why we do it. This is why we do it." For those of you who hate selling half and say, "Well, why are we kneecapping our biggest winners?" And believe me, I hear you. I have another account that I trade that I don't do that on purpose. I just let these things run as long as they can. Unfortunately, when that happens, I'm susceptible to moves like this, right? Letting a very nice winner completely melt in my face and go back to zero or worse, right? But for those people who don't like to sell half, when they get those big runners, they get the big wins, okay? So for those of you who don't like to sell half, well, this is why we do it, okay? And I'm not saying one way is better than the other, okay? That's a debate that'll never be settled, all right? And it always looks, and we can only know the right answer with hindsight, with 20, going back in time. We never know in the moment. Like there's no way that I knew when I sold half of this position at 650. There's no way I knew that that was the top. I didn't know that at all. That was not my motivation for selling. My motivation was simply because I thought the stock might hit some resistance and just chill out for a little while. And I'd like to take some money off the table while it figures itself out. That was my reason. That's it. All right. But guys, this is why we put plans together. And if you're not a member of All Star Options, consider joining. We put together detailed trade plans for every trade that we put on, including where we may or may not take profits, where we're going to stop out, how we're going to size our positions, what option strategy we're using, and why. All those details, whether you're an experienced options trader or a new trader, you'll find value in seeing how I put plans together and stick to those plans, more importantly. So that's it for the exited trades this week. We just exited 3. Next, let's update some stops. We have just a couple, just 3 stops to update in no particular order here. We have Hut. We still have till September for these calls, but man, has this trade just been an absolute bomb for us. We bought the September 26, 25 strike calls back here in late July. This stock is absolutely ripped. We've been raising our stops along the way. Our stop now is at 38.50. We don't want to see Hut 8 get below 38.50. To me, that would be a bearish development telling me that this rapid rocket ship ride has come to an end, at least in the near term. And so I will look to exit below 38.50, but we're comfortably above that for now. Let's see what the future holds. But that's the stop now for Hut, 38.50. Next up is Interactive Brokers. We're long a bull call spread in March options. We're long the 65 calls, short the 85. We're starting to make some money in this trade. Still it has some work to do, but I'm raising my stop now to 64. Corresponds with this recent pullback. Feels like a significant level to me. I would hate to see Interactive Brokers get back below 64. And finally, SEI. This has been a great trade for us. Started out as a May risk reversal where we sold the May 35 puts and used those proceeds to finance the purchase of the May 60 calls. When we put that trade on right out of the gate, we collected $1.10 net credit. Well, according to the plan that we laid out, again, all the steps were laid out in the plan document for those who get it. When we were able to sell half of our calls at a price that would allow us to completely cover all of our puts and leave us a little money left over, we would do so. And we did that on October 14th. We sold half of our calls for $12.40. That more than paid for covering all of our puts. So now we're sitting in a very nice, comfortable credit in this trade. We can't lose. Guaranteed winners. All we have now is half of our long call position. They could go to zero. We're still walking away winners. Hopefully they don't go to zero, but they are out of the money as we speak. These are 60 strike calls. We're still out of the money. The stock's moving in our direction, which is great, but it still has some work to do. But either way, we're guaranteed winners in this trade. That's the beauty of a risk reversal that goes according to plan. All we need is a little bit of movement in our way, and we could take off the short puts and book more credits into our portfolio. So that's the updated stop in SEI. We're moving it to 40. I don't want to see it get back below 40, which is right around where we entered. Okay. 40 is my new stop in SEI. So that's it for updated stops. I got the slide here for those who like to take screenshots of that. There you go. And lastly, like I said before, if you're not subscribed to All Star Options, please do it. There's the link. It's also in the chat. Oh, I had a question in there. My apologies. Let me bring it back up. Kevin had a question in there. He wants to know, with the market doing what it's doing lately, let's bring this back up here real quick. Let's bring up the SPY. SPY has been kind of, in the muck a little bit lately. And Kevin's asking, hey, is this a good time to put on short strangles, right? Short strangles, for those who don't know, that's an option strategy where you sell an out of the money put and you sell an out of the money call. You sell them naked, so you have the possibility, or you have theoretically unlimited risk. So you have to be careful in what instruments you sell strangles and under what conditions you sell strangles. Kevin, I'll tell you that I do think that this can be a very good environment right now to sell some strangles, thanks to VIX being elevated, like we mentioned before, VIX hanging with a 19 handle. That generally can be a good time to sell strangles. Now, for me, a best practice I engage in, I will only sell strangles in index ETFs. So SPY, for example, or QQQ, or maybe the semiconductors ETF, SMH, or TLT, the bonds ETF, things like that, like very liquid ETFs that don't have a likelihood of a severe, sudden, large gap against you overnight that you can't manage your risk on. You are susceptible to that risk in stocks, certainly, especially during earnings season. All right. And especially in lower cap stocks. I don't necessarily say stay away from strangles in stocks, but if I'm going to do it in a stock, it's got to be a mega cap stock, something that's probably not going to have a 20% gap overnight against me. The big stocks like the Amazons, the Microsofts, the Apples, right? Names like that, I would be comfortable strangles. But generally speaking, I'm going to stick to ETFs. And Kevin, yeah, I think this is a good environment for it. I've been selling some premium, some delta neutral premium in my portfolio, just as, portfolio hedge and portfolio ballast as we've gone sideways. And I find that to be very useful at times like this. So great question. I'm glad you brought that on. I hope I answered it for you. All right, guys and girls, ladies and gentlemen, that's all I got for you. So again, subscribe to All Star Options. There's the link. You can find it in the chat, or subscribe to my free options newsletter. Please do. Love having people in there, and you guys can email me, respond to my emails, and we can have conversations that way. Or if you just have a question about anything we've talked about today on the show, shoot me an email, info@allstarcharts.com. That'll get routed to me. I'll be happy to answer your question, or hit me on Twitter @OptionsSean. All right, that's all I got for you. For those of you getting an early start on your weekend, enjoy your weekend. I'll be here slaving away again tomorrow, trading these markets. Hope you guys have a great day. Talk to you again next time. Take care.